I still believe the Bitcoin bomb will burst this year. The entire Bitcoin narrative is a manufactured illusion crafted by insiders to convince you that governments and institutions are gambling on crypto and that the market is booming due to real demand. But to truly understand the value of anything, you need to study Marxist philosophy. Without dissecting use value, capital value, and labor value, you'll never understand the true worth of an asset, let alone the size of a bubble. This crypto casino is designed to let gamblers win big at first. When the room is roaring and everyone is glued to the game, that's when the trap is locked and the plug gets pulled. And when that happens, 99.99% will lose real money. Then a new game begins. For me, Bitcoin has never been an asset. It has no tangible backing. Just think about it. US Treasury bonds, backed by taxpayer money, are considered one of the safest assets, yet investors still sell them off for higher yields, saying they're overvalued. So what justification is there for a digital asset like BTC to be priced as high as a kilogram of gold? Gold is real money. Bitcoin is just speculative hype. It produces zero real value for society. This is the largest bubble in human history. How could something that creates nothing for society have a market cap that rivals the combined value of nearly 500 of the largest companies on the New York Stock Exchange and NASDAQ? It's a financial scandal possibly more insane than the tulip mania. This is a house of cards built by the elites. Ask yourself, why would they let you win? When the curtain falls and the power is cut, will you be fast enough to exit with your money before this house of cards collapses? If Bitcoin is truly decentralized and unstoppable, why is it that a small handful of entities control the narrative, the wallets, and the legal frameworks? It's all smoke and mirrors. Here's the evidence. 1. El Salvador's Bitcoin investment was a staged illusion. There's no proof of any actual purchases. Blockchain data shows that 6,111 out of the 6,114 BTC in their treasury were not even bought, but transferred directly from Bitfinex and Tether. Yes, Tether again, the same entity that printed El Salvador's so-called Bitcoin money. This wasn't national adoption, it was a money laundering operation, dressed up to trick small investors into thinking, the government is buying, so you should too. No surprise Bukele embraced it. Tether likely bribed them and used them as a PR tool. Bukele got media glory, Bitfinex got liquidity, Tether got to survive one more day. But for those who missed it, El Salvador walked it all back once the experiment became a disaster. Chivo Wallet went bankrupt and shut down. Usage dropped by negative 98.9% after launch. Even Tether's ecosystem couldn't sustain it. There was simply no real demand. 2. Jack Mallers is a part of the inner circle, with deep ties to the Tether Bitfinex machine. His new firm, 21 Capital, claims to be a huge BTC investor, but on-chain data shows 14,000 BTC, over $2 billion, were sourced directly from Tether's reserves. They claim strong demand, but the only confirmed investor is Tether, a company already caught lying to regulators and committing fraud. This isn't an investment, it's internal accounting, another shell game in a broader liquidity circus. His other firm, Strike, is 100% dependent on Tether for payment infrastructure. This isn't innovation, it's centralization through obfuscation. 3. Michael Saylor is running the same Ponzi loop. Make no mistake, Saylor is tied into the same closed ecosystem that props this all up. His company, MicroStrategy, isn't about innovation. It's one of the riskiest, most leveraged Bitcoin proxies in the market. Their strategy is clear: raise capital, buy BTC, pump price, raise more, repeat. It's a circular scheme fueled by hope and hype. Saylor's story isn't about sound money. It's about keeping the scam alive just long enough to extract maximum value before it all collapses. This is not a revolution. It's a financial mirage powered by liquidity fraud and insider games. And when the music stops, will you still be sitting at the table? 4. Tether and Bitcoin are trapped in a self-reinforcing feedback loop. Tether props up Bitcoin and Bitcoin props up Tether. This setup is a ticking time bomb. At Bitcoin 2025, Bitcoin maximalist Saifedean Ammous, author of the Bitcoin Standard, finally said what everyone was thinking. Tether is quietly accumulating Bitcoin, steadily increasing its reserves. One day, its Bitcoin holdings might surpass its dollar reserves. At that point, Tether won't just maintain its peg, it could actually reprice higher. Imagine a stablecoin worth more than $1, backed by Bitcoin instead of treasuries. This mirrors the collapse of Mt. Gox and Lehman Brothers. When liquidity disappears, the entire house of cards comes crashing down. There are no real tangible assets, just unstable claims propping each other up. Prepare for a massive collapse. 5. At the Bitcoin 2025 conference, Tether claimed to hold over 100,000 Bitcoins and more than 50 tons of gold. Sounds vague? Here's the playbook. Tether prints millions of dollars out of thin air, buys BTC with freshly minted Tether to push the price up, sells excess BTC to buy USD and gold as reserves, parades those reserves to legitimize itself. Meanwhile, the crowd, Bitcoin maxes, cheers, believing there's no fraud. Those who trusted Tether were right from the beginning. It took 2 days to dig up data showing Tether had been quietly buying BTC years ago while publicly denying it. Now they can't even hide it anymore. Tether is the sole large buyer propping up the entire Bitcoin market. Everything hinges on their relentless printing and purchasing. 6. Institutional demand for Bitcoin is temporary at best. On June 2nd, spot Bitcoin ETF saw net outflows of negative $267.5 million, marking 3 consecutive days of withdrawals. This isn't a one-off, it's been happening for months, showing that institutions are pulling out fast. Back in late 2021, Bitcoin ETFs saw billions in inflows at the peak of the hype. Since then, institutional interest has dropped by over 91%. These steady outflows reflect rising skepticism, tighter regulations, volatile markets, and unclear returns. Institutions were supposed to support Bitcoin prices, but they're retreating instead. Institutional demand was just hype and FOMO. The smart money has already left. Worse, even crypto-friendly SEC officials are cautious. They're reportedly hesitant to approve more spot Bitcoin ETFs from firms like Bitwise and Grayscale, citing weak anti-fraud measures. This whole Bitcoin ecosystem is smoke and mirrors. The industry runs on relentless manipulation. Insiders like Tether and Bitfinex orchestrate a carefully scripted show, shuffling coins and liquidity to create the illusion of demand and adoption. They've built a strong brand narrative to lure in investors, convincing the world that governments and institutions are all in, but in reality it's a sophisticated pump scheme. If you pay attention and see past the noise, the danger is obvious. Bitcoin's price is not driven by organic growth or genuine institutional interest. It's almost entirely propped up by limitless Tether printing and BTC purchases to artificially keep prices high. Over 90% of Bitcoin demand flows through these Tether injections. Once stablecoin regulations, like those currently pushed by the Trump administration, crack down on this liquidity tap, the market will face a brutal reckoning. Bitcoin will almost certainly crash below $100,000 and could easily fall under $10,000 this year. The so-called institutional demand has vanished, the insiders have been exposed, and the support mechanism cannot last forever. This whole story is a manufactured fantasy, a house of cards waiting for the first strong gust of reality to bring it all down. Consider yourself warned. This isn't the future of sound money, it's a financial time bomb ticking away. Thank you for watching my video. If you enjoyed my perspective on this financial issue, please give it a like and share your thoughts in the comments. If you find my channel valuable, don't forget to subscribe and turn on notifications so you never miss my latest videos.